Hello, good morning. Welcome to another ES Futures trading stream. Today is Thursday, April 10th. It is 10:24 a.m. Eastern Time in the US. Here in my charts I have window trader here on the right side and Sierra here. I am testing Sierra. Has I still believe window is the best. But Sierra is really close, really close. And it has. I was surprised to see that it has actually some advantage regarding uh, relative to window. We are coming from a huge short cover rally that happened yesterday, and don't forget, I'm trying to remember that all of what happened in the market that was extremely short. Inventory was very short, based on news basically. When we have this kind of movements in the market, those kind of ones usually the market takes or retrace it all, if not most, if not all, in the following days. Before checking or showing something, let's go just straight to what the market is doing now. One of the things that I have from yesterday, and this market, right, or these markets with the volatility we are having now, we have 33%, 37% now. I guess it comes close to 32 or 33 yesterday. But the market opened way up high relative to yesterday's, to the initial balance. Right? I don't talk too much about the initial balance, but there is something that happened there. And if you check, this is something I forgot to notice. I noticed kind of like a late today. It was this pullback low, right? After all of the advance that this market had, right? After all of this that happened yesterday, it forms a distribution on the upper side that has this L period, makes a low, and then immediately after the market closes up high. And this is my main reference short term. If the market keeps this one, if there is something to the upside, the market will, first keep this one. Second, we start building value in this area. And the first thing, the market has not done that. It rather has moved half back to this exactly reference, which is, if you were following the streams or if you check the Discord, that's a reference, that's a dynamic reference that I'm using to monitor the market for a while now. Kind of like a way to see, for example, I cannot do that. I don't have access. I don't have the money to build programs that will trade that way, right? Especially, the volume, the amount of capital to do that. To move markets, basically, using these references. And that tells something about the market. right? The thing is, it's very hard. The second thing is this distribution from the overnight. It's very hard to trade with the straight futures because the first positioning, when you trade, the first position is always speculative, right? I can only speculate based on my market generated information, right? And position myself for movement in the market. Doing it with futures is very risky under these circumstances. At least with because one thing because of the volatility, the uncertainty, and because these references that you may use to monitor the trade are kind of distance, right? You need to allow the market to move long distances. That can be very expensive. Now, right now, I haven't shown you the daily, but look at this, right? This is an inside bar. This is an inside bar. Short term, we have a weekly and monthly time frames trending lower with the daily showing change, right? So this is in tune with the daily. We have a market to the upside, market opening in the upper side, inside range, a huge range, and we have an inside bar forming, an inside bar forming here. I think it's not. Now, something that I was checking today. Let's bring down the dailies, the volatility remains very high, right? We talked yesterday with I don't know if I talk about this, but I put that in Discord. Is with the volatility we are having, it was 50% yesterday. 7% range was within the realm of possibilities. It was really, and that 7% range mean the market establishing or potentially doing ranges of up to somewhere between 250 300 points, right? So and the thing is, at one moment in time, the range was very narrow range, right? 100 points is under normal circumstances. 100 points is huge, right? But for the environment, 100 points was like this little bit from here to here, right? Really narrow range relative to what the market was having. So there was potential there. There was potential to the upside, to the downside, who knows? Nobody knew that, one of the things that many trade we disregard is that one of the main components of this business is uncertainty. Out of nowhere can come anything. It can be a tweet, it can be a bomb in a building, it can be an army taking a country, whatever, right? And those kind of things just come out of nowhere, right? Somebody being shot, an explosion over here, pipelines being, whatever, you name it, right? And I am getting away. I am zooming out, right? Zooming out from this one to a bigger perspective. And what I want to show you here is, this is starting to worry me now. Dollar weakening is not a good sign in general. It's not a good sign in general for markets. And we are getting, especially because we have a trend, and we are getting very close to this low, this 2024 low here, which put the markets close to 2023 low as well. And look at this. And this is what traders watch, right? What kind of formation is this? Head and shoulders, the middle finger pattern, or whatever, call it whatever, man. Crude has a huge break yesterday. Gold is back, potentially making all-time highs. Again, it's trading from this 50 moving average. I believe that this can stay for quite a bit, long time now, in this kind of environment. At the beginning of the year, we have talked at one moment that, this kind of environment, it wasn't like this at the time, but was quite. It was starting. We were starting to have a glimpse of what could be. It may last. That's what we talk. It may last maybe 2 years. Right? It was something that can stay. That now, and the next thing that worries me, and this is really also something that I've started to pay attention, is the bond market. Right? Yesterday, or this week actually, or past week, we were talking about this range here. When the market came down here, this was really, really dangerous, right? And this break that we had here took part of this. Right? Took part of it, was bought for 100, and this is the 10-year, by the way. I didn't close this gap. Probably the market is going to come back and check this gap. It print a gap while doing so. Now that gap is closed, right? But this is very, very dangerous. Very dangerous situation here. What happened here in the 30 is something that may happen here as well. All right? And the combination of this plus what was happening with tariffs is, in my humble opinion, what has bent the hand of the current administration in tariffs. Always bending the hand, right? We talk about that as well, about how, let me call this back here, that this administration will keep doing what was doing, at least until the market reaches 20, 25, or maybe 30% in the lower side. I don't think that the market we have seen a low yet, but we have a range now. Right? The market is printing a range. There is really interesting things happening here now. We have a two-year range here. Really fast, really quick in the first 4 months of the year. 3 bars range here, another 2 here. So there's a lot of things that can happen here, right? And if we have a range, the market can check this one, can check the upper side, check about anything. And I don't know what's going to happen, right? Monthly, with the movement that we have, I guess sometime, I don't know, if on the stream, on the Discord, I started to call this level or this reference, which is clearly is clearer here, right? You can clearly see here. Let me remove this out. You know, this is an area, right? Instead of putting there, let's put this one here. Right? Kind of like a gap here, or it's really narrow area between this upper range and the lower range. Yeah, that's what I'm watching, and that's one that I'm calling now a go no go level, go no go reference. Yeah, the area between this high here and the current lows, this one. Yeah? It's not a level, but an area. Right? Go or no go. The market comes here and takes it, or the market makes a stand there. The next thing, let me check where 25% is, right? Times, that will be a huge correction. I think we have seen most of it. 4624. Uh-oh. For 624, that is 25%. Way down here, right? Which is very interesting, huh? What is this? 4633? I have this level marked in my charts. 4623. As what? We will see. We will see. Let me check this. I am curious now. Yeah. Look at this. This one here, all right, is the breakout from 2023. The market makes a high here, breaks through this. This is not a gap. This is a change of contracts. Breaks and never come back. So this is actually is a very particularly important level in the lower side, which happens to be us. Right? What is it? 0.5. 3.5. And what happened to be this breakout? This is 2023 breakout level. This is important. This is a breakout of this. This one is a breakout of the previous, of this year as well, basically, right? No? There's an attempt to make a highs here. Break follows. And then with the yearly attempt to take back the highs. And when it finally happens, 1 year later, this is it. Right? I'm not saying the market is going to, the market has to come to this level or anything like that. Right? I am doing what I'm doing. What you are seeing here is I'm doing my homework here. But this is part of my homework, and I am what I am watching this market, and why I'm doing this here. I am watching this market, believe it or not. Okay, I have made. Man, these guys are just so annoying. I decided I want to sell something here, but I need a rally to do that. I will talk about that later. Okay? And the market taking previous period high is an indication, right, that also rotation are high now. And you don't need those guidelines. You have seen how much the market has, how big the range yesterday was. So the odds that the market has upside continuation on top of that are not that high today, are very low, and the odds of rebalancing of that long inventory are actually higher. So some rotation can be within the odds. That's something that you must have be able to assess before, and all that based on the information that you have seen yesterday, and the one that we are watching here now, right? The interesting part here is that the previous areas that the market use when going higher, right? You have this range here, I'm talking about the weekly now. You have another range here, another one here, right? I'm highlighting these things so you just can see. And notice how this market uses this again, you know? It used it when it was breaking and is using now again when it's going higher, right? This one can be support, resistance. What level is this? 54, is it? 54.10, something like that, right? Which, right? I am calling this, instead of doing that, that's just, you have a rough idea, right? But most important for me, and this is personal, I have noticed here a range here. One range in the lower side and another range in the upper side. Right? Can you see this? There's upper range here and this lower range, and around halfback of 2024. Those are bigger terms now. I'm using that now instead of these ranges, right? But those references are actually based on those ranges, right? And one time frame lower, right? Now, and this is when the speculative part of the business comes, right? We were Wednesday yesterday. When you saw this, I'm going to make this big. When you saw this bar here yesterday, where the opening was and where this, right now it's down here, right? Where this was yesterday, it's up here, very close to get back inside this. Did it get in? I don't know if it did get inside. 55.20. Yeah, it did get back inside this. It did get back inside this range. That is a huge buying tail. And it is impressive buying tail. And it will be even more impressive if the market closes above this opening, much more above previous week high. So the odds of that happening after the movement we have yesterday were very low. Hence, and that takes us to the next step, the speculative part. And the way how you trade, how we trade, the strategy now is adjusted here. We start to see that. How can you short this market with straight futures, for example? All right, with straight futures, how can you short? You may have short here, for example. Try that say though. Not a good idea though, but just pretending. right? And the market retraces, right? This is not a small retracement. This is 20 points, almost 20 points. That much will be underwater using straight futures, right? Options gives me a better, you know, better risk management in that case. I can see these things, and my position, will be underwater maybe 1, 2, 3 points. Okay. What I was saying is, just like yesterday, I think I showed you something yesterday when the market, what the market was doing, when the market, I don't know if when this break happened, on or when the market down here took a sailor, what was sailor at the time? Previous day sailor, right? It was a big movement. I didn't do anything yesterday. I was checking this 5,800, 4,800 options, and a rally of like 30, 40 points, even more than that, really did little damage that to the value of those ones. Maybe 1 point or something like that. I don't remember exactly, but it wasn't much, right? And yesterday, actually, when the market had, I observed something weird, right? When the market was for example up here, I don't know where exactly, right? But those options, the market started to break here, right? And the options, which were puts, it was really weird. It was really weird, right? Because when the market goes in the direction of the options, in this case puts, usually those values increases. But it was weird because the value were decreasing. This is the first time. That was the first time I saw something like that. And that is weird. It's weird, really. I never saw something like that. And I actually commented. I remember commenting. I don't remember if I put it on the screen, but because my trading goes in another screen. That was weird, man. And I decided to actually get, short the market, buy a put. I decided to short a rally. I decided to do that when the market has this, when I saw this one coming, and I saw this coming, right? And this one coming, I guess this was, I don't remember, there was something else, right? Value, I believe. Value was getting, it still wasn't inside, right? Was lower, overlapping lower relative to, yeah, it was overlapping lower relative to this day here, or to this day one. But this thing happened, right? And before that, I had this conflicting thought, right? The 5,000, because right there the 5,000 as well. So very mechanical, all right? Very mechanical. So this, I will do something. At something that I forgot completely at that time was how tempo was the previous day. But I think unconsciously I was disregarding that, right? And making a play for the market to take these lows here, right? To take these lows, or maybe getting closer to that. but the market never gave me an opportunity to do that. I was started to sell here, right? It was started to rally here, and then boom, you got this news, right? Oh, the thing that I was thinking as well was, man, this market, and this is relative to what happened the previous day. This market is really, really short, really. But that little piece of information, the tempo at how it was yesterday, that I forgot. Uh, this market may be actually too short to keep going lower, and some rebalancing may be needed before the market moves a new low. All right. Now, this reference go lower now. This one comes here because it's a distribution close. It is not just 17.5, but this is closing of these distributions. Yeah, everybody can see that. Right? Oh, there was another fact that I was thinking, right? This 45-degree line that happened here, the market was doing the same thing again. You know, and the Discord, I have put a comment there that sometimes the market does that a second time, and the second time it does, it is a different kind of participant that come there, right? Because the first time short terms, in this case short terms, got crushed, and the second time probably they will be selling now instead of buying. You know, just a part of the market dynamics. Let's cut this one. Now, let's go to the daily. We now have a potential trend here. Notice what is this, man. This is really very mechanical trading going on right now. Look at this low here. I hope you have seen this low here. Yeah? This is part of the homework now. I mean, and it is always changing. But this is a 3-week range, 3-day range here. The market took the higher range, overextended. This range is very narrow range for the market. For the market to not take this high. But this one as well is a 20-day range. If you count this, you have a 20-day range here. So balance guidelines apply here, balance guidelines apply here. It's kind of like the market is relative to balance. The market is in between these two big balance areas, right? 20 days here, 3 days or 4 days here, we call it. It's right there, right? If there is some serious selling, this market would have no stop here, right? This reference here is this one here, and that's why I decided to keep these ones here. I didn't change it because I still will be using this one. I added the late pullback low. This high, we do have excess. We do have excess in the high. And what catches my attention from the overnight is these rallies coming to the same reference here and coming to sell, okay? Sell. But the main thing, that thing from the overnight, right? From the overnight. Now, instead of checking the 4800s, I'm doing is I'm checking the 49. Just checking, huh? Just checking. Look at this. Well, this market open. Well, this bar open. This is an outside bar. Market looks below, above, and closes below previous range. How is volume? What kind of volume do we have today? Very low volume relative to yesterday. Volatility 40. Remember that this is not low by any means. Yeah? This volatility is very high. What is making us think we're getting used. People get, humans are animals of habits, animals, right? Habits. We are really quickly getting used to these ranges. Really big ranges here. And this one doesn't look that big. Now, very small. We are having the same situation we have yesterday here. The same situation that we have yesterday. Very narrow range, rotational market. Okay. The overall and the craziness that's happening with these tariffs, right? The fact that there is a pause for 90 days makes you think that no, tariffs are not going to be there, are not going to be here, but most may forget that there are actually really high tariffs now all over the place. Will still remain that have been changed. What's happening with China, I think is just no nonsense, man. The only one, complaining about, and this is just personal. Right? This is my opinion. Everybody's entitled to their opinion. Right? The fact that that trade surplus is negative, it doesn't mean that your country is being taken advantage of. Right? The trade can be negative, but the influx of capital, the influx of business is overwhelming positive. Right? Everything comes here. United States is at the top, is way up high in that regard, and most money, most business flows here than everybody else in the world. There's a distribution here. There's a thing that is, I may not agree, but I don't like it, but it is what it is, right? Okay. Tempo is really slow here. There was no counteraction. This is a timid attempt to do a counteraction here. The odds of rotation are high. I haven't taken a look actually to the other markets in quite a while. I was just too. Oops. What the heck? What the heck? What the heck? Oh. Oh, this is grid. It's not grid. Where's the background? Oh, background's here. That's bad. I like that one better. One of the things, one of the key elements of trading, is, or I guess I'm going to tell it I'm going to in a different way, right? Many people mistake trading or think that trading is selling, buying, selling, buying, selling, buying. Trading is not that. That's part of trading, but it's just minimum part. Many comparisons have been made or are made with trading. Some people comparing to racing cars, and other people compares to playing sports. But I think one of the most accurate comparisons can be comparing trade to hunting. Because to hunt, when you hunt, you need to have a lot of patience. When you go to hunt, you don't know absolutely nothing about habits, the habitat and habits of the animals you're hunting. And as you start walk your area, the forest, you will catch something, you will see something. You see trails, you see signs, right? That animals may have used this, may have been here, or things like that. That's one part. That would be the equivalent of gathering market generating information, right? In this case, you look after that. And that, I think, and that's another part, right? Most of these activities, we do those things. In trading, the market is the one who provides us those things. The next thing, next stage in hunting, is waiting. Once you do something, once you think you have something, you place your bet. Okay, there's something going on here. I'm going to stay here. I'm going to find a place to hide and wait. And it's as simple as it sounds, right? It's just like that. You can build a terrace. You can build something, a tree. You can hide yourself, away from the spot that you are looking after, or things like that. Right? Just wait. The fact that you wait doesn't mean that something's going to happen. But that's when you place your bet. You bet. You wait and wait. And wait for an opportunity. Most of trading is like that. You are watching, and boom, okay, there's something here. And then you wait for an opportunity. Execute, and after you execute, there's two probable outcomes, a loss or a win. As simple as that, right? As simple as it may sound. Most traders don't pay attention and don't plan the losing part, which is actually very important. I suggest you to read the best loser wins by Tom Hogarth. It's a really good book there, really nice book, right? Because we don't want to lose. We don't like to lose. And statistically, most traders wins. Right? Over 70, I mean, and that's crazy. He puts a data, right? Real data. I didn't know that was the case. Most traders win. It's around 70% of the time they win. But in capital and financial terms, most of them lose money. And at such a high rate, right? Over 95%, 97% of traders lose capital. Right? And you can check that yourself. Check your bank statement last month and check it this month or last year or this year. Right? That's another part of trading as well. If we want to do something here, we need to be honest with ourselves. Because that is the next thing on this business, in the process of learning, which is starting to know yourself. And that's why trading cannot be taught, because it's unique for each individual. It will depend on their goals, the mindsets, time frames, financial abilities, etc., etc. Cannot be taught. But people refuse to believe that. People don't believe that, because what we have available out there is literally hundreds, if not thousands, of indicators that will tell me where to buy, where to sell. They don't want to do the job. People don't want to do something as simple as this. And what is this? This is my homework. Every single day I do this. After the close, before the opening, during the overnight sessions, during the weekend. But I do this every single day. Every single day. You can keep going higher. And you will see I have been doing this for years. All right? And when you start doing it, you will notice something. You will notice that you start to notice things. This is fabric, for example. Right? I keep going. I can keep going and going. This is years here. I have missed maybe three or four homeworks during these years. Right? But that is something very, quote unquote, simple. But it requires a lot of effort to do. Because it forces you first to see the market, to make some sort of reading. At the beginning is very complicated. At the beginning is just narrating, right? Narrating what happened, right? But that's part of knowing yourself also, right? Like when you know yourself, the first thing you get to know is where you are at. What kind of person you are. What kind of trader is potentially, what type of trader is you have the better potential to be. Right? What type of trader, what kind of trader you want to be. All right? With time, that also, the homework evolves, changes. It is not just narrating what happened. I can say, for example, at the beginning it was like this. Okay, the market make a double low. It was bought from 5,000, and I have a huge breakout on news, and it closed the upper gap, and oh, let me pull back. It closed the upper gap. Oh boy, what is this? Oh. It closed the upper gap, and I don't know, it's things like that, right? You know, that with time can change, right? To inventory was really short. Inventory was very short for the market to keep going lower. Some sort of rally was needed to do the rebalancing, to do some rebalancing for the market to keep some, because sometimes it just happens, right? It just happens. Market is too short and it's rally to keep going lower, right? The previous day tempo was extremely low. Tempo was excruciatingly low. Was one of the worst breaks that I have seen in quite a while. And inventory got unbelievably short, and probably in hands of very short time frame traders. That will be different. That's a different. It is the same. You are looking at the same market, same data, but you have do it so many times that you start to see, pay attention to more things, right? It's just like when you start. I don't want to go back to hunting again, because not too many people hunt. But let's go back to, let's use driving in this case. Most people drives, right? At the beginning, you pay close attention to, for example, to not to get over the other lane on your right or on the left. To not to hit somebody in the front, somebody in the back, right? Those things. As you master that skill, you start paying attention to other things. Oh, okay, I don't want my engine to stall. I want to take the curves smoother, right? You master that thing, you move to the next thing. That thing happens. But for that to happen, you need to start to do it. It doesn't come naturally. If I, and that's why, for example, I can place this homework for everybody to see, all right? And it's not going to be useful. It would be the same. It would be the same as if you just go out here, check open YouTube, and look live futures trading, futures trading live, right? Somebody's stream. Okay, I go here and they will tell me what's happening and what they're going to buy. But it has to be you. It has to be you, right? It has to be you, because when it is you that make the mistakes. It is absolutely crushing when you do mistakes, right? And Jim, he's my mentor, right? Everything that he teaches is here. Everything that he teaches is in his website. Everything that he teaches is here in his webinars, in these free webinars. Everything is here. You can pay for. He doesn't do intensives anymore, but you could have paid $1,000 or $1,200 or you can only read here. But he makes these things available to the public, right? And he says something, right? No matter how much information I put there, you are not going to be able to advance unless you have somebody out there, somebody that guides you. There has to be somebody that guides you. I can put everything. I can and this has been said so many times, right? Any winning trader can put his strategy out there for everybody to see. For everybody to see. And still, traders will lose money. Because it belongs to him. You didn't come out with that. All right? I want to share something here that I was talking to a friend. Oh no, I don't wanna do that. Let's do another way. But he mentioned somebody that's popular. The sharp trader. Probably you have here him as well. But when this market was up here, when the market was doing this, he put a B there. This one. Holy knows I'm buy. Holy knows I'm buy. I couldn't disagree more than that with him here. And I disagree because I do the same, right? I do the same. He can be wrong. But if he's wrong, he will do the adjustments. Okay? Or I can say he's wrong, he's a fool, he's stupid. It's not about that. He may have noticed that he's wrong and had made the adjustments. And unless you do the same, you won't be able to improve because you won't be able to do any kind of adjustments. That's what I'm trying to say. Okay? All right. The trade is developing here. And now, 40% range, that would be like 200 points. 33, 300, that's 100, 200, around maybe this. It can be this, or it can be up here as well. Now, this market is re-entering. Pay attention to that. It's re-entering that 3-day range. Okay. I haven't checked these indices. Oh, look at this. This gap has been closed here. Only one gap. Nasdaq doesn't have any gaps, man. Nasdaq closed all gaps yesterday. Huh. This is interesting here. Those 5 points puts now are 7, almost 8. Now, it's not the overnight here that was for me a thing, but this one here. Hardback is not here anymore. Oh, how can I change this? I want to move this thing. Hardback is down here. Where it's being moved to? Look at that. Very close to what is POC. You know? Balance guidelines in play. Okay? The speculative part of this business is what is the next step in the evolution of on the learning process, right? Observing the market, getting to know market dynamics, getting to know yourself, building a strategy, formulating a strategy, adjusting the strategy. And the execution is always speculative, always speculative. Okay. I haven't said, I don't know how long I've been here, about an hour, but I haven't said much. Okay. If you have any questions, please let me know. Because I will be calling the stream very soon. Alright guys, have a wonderful rest of the day. Stay safe. Hope we can see you tomorrow. Bye bye.